Today, Australia's economy hits the wall. Hi again, it's Martin North from Digital Finance Analytics. Well, notice post covering finance and property news. It's Friday and Tarric is back with me for the last chat of the year. Tarric, hello, welcome back.
Thanks, mate. Nice to be here, and a Merry Christmas and a Happy New Year to all our followers watching along at home.
Absolutely. It is that time of year. Of course, the seasonal festivities are now well underway, and it's amazing to me how many people have already gone on leave already, including quite a few politicians. But, you know, that there are a few issues we should reflect on just briefly before we get into our economic discussion and look at the charts. Just a quick reflection on what's happened over the last week, because you know, that was an astonishing event. I think you put out a Twitter post saying this may change Australia forever, and there's certainly a chance of that. I worry that we're focusing on the guns, and I'm worrying that we're focusing on hate speech more broadly, and I'm worrying that we might be changing Australia. But it is shocking, a shocking series of events, and our thoughts go out to all those directly or indirectly impacted.
Oh, absolutely. It's horrifying, and it's terrifying to see something like that happen in our country. And I think it's been very disappointing to see what the government's response has been so far on terms of, you know, focusing on firearms, on hate speech, on all these different things, when I think that there are mechanisms that already exist that would have stopped those men from performing such a horrible act on our soil. And you know, I think that there's some failures there that need to be reflected upon as for how that happened. How, you know, I think one of the most concerning things is just how even just a few hours after the fact, we knew these guys were bad news. Even before, you know, like leaving aside the obvious act itself, but just the intelligence, the various different things that came to light, just you know, less than 12 hours afterwards, it was already clear that someone had dropped the ball, that mistakes had been made, and it's disappointing that it's come to this, because you know 15 innocent people have lost their lives.
Yeah, absolutely, and the coverage I think has been in some areas quite balanced, but others pretty rabid, unfortunately. And I'm noticing now, of course, there's a big debate about, particularly in regional Australia, where guns are very much part of doing business out in the bush, and saying, well, hang on a moment, you know, are you discriminating against us now? And of course, the chances are we're going to find the speech freedoms that we've had up to this point might be trimmed, and whether it's going to be trimmed appropriately. But to my mind, Tarric, the bottom line is what we're seeing from the government are announceables, and you know, things that they want to be seen to be doing, whether they are the right things or the wrong things, the good things or the bad things. And that thought of announceables and performative politics actually, to my mind, does reflect the dynamics of the last year. Because if you look at the data, and if you look at what's happening more broadly, what is being said in the political sphere and what is actually happening on the ground is, well, frankly, more and more disconnected.
It is, and it's really disappointing to just see how the discourse has evolved on this, because, you know, you take the firearms issue. You know, Australia has done a fantastic job at reining in access to firearms to people who shouldn't have access to them. You know, Australia has done a brilliant job in dropping its gun homicide rate, for example, you know, to a level where, as of the 2023 data from the United Nations, we have less than one firearm death per million, one firearm homicide per million people. And of that, only 10% of those firearm homicides are performed with legal firearms. The rest are all done with illegal guns that have either been stolen, are leftovers from prior to the Howard era gun control, or they've been smuggled in from overseas. And I think that is an impressive thing. I mean, so that means that on average, say like last year when there was 31 gun homicides, if the average rate seen in the Australian Institute of Criminology data held true, only 3 of those deaths were with legal firearms. 3. And despite the fact that there's this idea that, look at the proliferation of firearms and blah, 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 there are around about, depending on the latest data the latest data I found is from Sydney University from about 2020. There's about 25% fewer registered firearm owners today than there was in 1997. So there's this whole idea of, we'll look at the proliferation of firearm owners. And all I could say is, what proliferation? I think that we're doing, for a nation that has a very large rural population, that has quite a few genuine purposes for firearms out there, I think that we're doing a very, very good job. And I think that, yes, more can be done, absolutely, to keep firearms out the hands of terrorists. But I think that we need to be very careful about not throwing the baby out with the bathwater and focusing in on those terrorists and what went wrong in terms of those guys getting their hands on those firearms, and not basically just targeting an entire class of people, an entire class of, firearm owners who are overwhelmingly law-abiding citizens.
Absolutely. And I think one of the questions which should be being asked, and hopefully it will be later, is how much did the authorities already know about the particular people who were involved? Because it does look as though they were people of interest. And there potentially has been failures within the system. And so one of the questions we should be asking is whether, in fact, the system has the right sort of processes there, but they're not being followed, or whether the processes are not right, or what's actually going on. And that is a more uncomfortable set of questions, but I think it's questions that will need to be asked and thought about over the next few months and years. But just more broadly, the thing I sort of wanted to reflect on from this year is just three little pen pictures for you. The first is a picture of Jim Chalmers gently spinning around, right? Spin Jim, being able to, well, frankly, be able to take a piece of data and then sort of massage it and move it and try and actually make a story off it to be able to make a political point, whether it's true or not. The second little thumbnail picture is the wet lettuce regulators like Emptor, for example, and the fact that they don't seem to be doing very, very much at all in terms of actually pulling in some of the bad conduct within, for example, the banking system. And I'm thinking of ANZ and Bendigo Bank as two examples more recently, but there's a whole bunch of issues that perhaps we should be thinking about there, and some of the lending. And the third little thumbnail picture is back to the K-shape, because what's happening when you stand back and look at it is we've got more and more people still under the gun from a financial position, more and more people struggling with housing affordability, and all of those factors which seem to me to be archetypal of a fundamental problem that we have in Australia. So put those three things together: political spin, the lack of good regulation, and the results of that translating into a very, very disconnected society with a lot of people under huge financial pressure, seem to me to be typifying what's happened over the last 12 months.
I think what's very frustrating in Australia, and this is, I think, true in places like Britain and the United States to varying degrees depending on locale, is that we have seen policymakers make bad choices again and again and again since and during the global financial crisis. And we've seen basically just a lot of demographics just hit a wall. People whose demographic has made less than zero progress compared with where they were in 2008. And we're going to get to that in a little bit later in some of the data. But it's incredibly fertile ground for the rise of third parties. It's incredibly fertile ground for the rise of populism and of political extremism. And I think that that's just a really disappointing set of settings, because that is how societies are undermined. It's how social cohesion begins to break down when people no longer feel like their leaders are working for them. And if you look at the data in, say, the ANU election study, that's exactly what people think. People think that politicians are a large majority of people think that politicians are in it for themselves and not in it for the general public.
Well, that's right. And when I reflect on Australia, and it's a great country, and I love it, but it's changed a lot over the last 20 to 25 to 30 years, and not necessarily for the better for many people. And it is because of the lack of political leadership and, to be honest, the fact that the fundamental issues that should be being tackled are not necessarily being tackled, but there's a lot of spin, a lot of noise, and a lot of misdirection there. And to my mind, what we've ended up with is where performative politics rules the day, despite the fact that quite often this doesn't translate into real positive impact and improvement for ordinary people, which should, to me, that should be the acid test. Are people better off? Are they actually feeling more happy about the place they live than 20, 30 years ago? Unfortunately, many people would say, no, things have gone in the wrong direction. Now, and it's not just Australia. I would say the same is true in the UK and other places too. But we have to sheet some of it back to leadership. We have to sheet some of it back to some of the complexities of the economic situation with trade and everything else around the place. But I think the simple story, Tarric, is that if you look at the late 90s, the early 2000s, Australia had this massive gift thanks to China and what China was doing. And the economic fallout of that was very positive for Australia. And we came to rely on it to the point where we got lazy, to the point where we didn't really start tackling the issues that we should have tackled. We didn't put aside some of those funds that came in, bit of a seagull delivery of all that benefits from China. No, we just squandered it and we just gave the tax away. And now, of course, it's a lot harder. And that's really the point. That's the story, is failure, but failure over 30 years.
It is. And I think that's one of the sort of challenging aspects of the political debate and the economic debate here in Australia, because too often it's all, oh, well, your side this, my side that, red team this, blue team that. But when the simple truth is that neither side has managed the economy particularly well over the last 30 years. Now, don't get me wrong, there was that sort of fiscal conservative streak of the Howard government at times. But then if you look later, so I think a good example of this is the accessibility of, say, the family tax benefit, for example, which was introduced, in the sort of middle of the Howard government. Now, there was a time when elements of that weren't means tested. The majority of it was, but there were parts of it that weren't. And then if you compare it to today's household incomes, what proportion of household income gets what, and sort of where a median income earner sits, it was much more generous in decades past when it was first introduced, because as you say, money was falling from the sky and they could afford to be generous. But the problem is that as we haven't had that forward planning of, well, what happens next? There's this idea at the RBA, at Treasury, and a lot of the commentary that basically it was the Asian century, that all this was going to last forever. I mean, I remember Julia Gillard when she was deputy opposition leader, and again as deputy prime minister, saying again and again and again, Asian century, this is all going to last, basically just the underlying thematic of this is all going to last forever. And it didn't. And now we're all paying the price for that. And I think as well that part of the prosperity under the Howard government, and to a lesser degree even under the Keating government after the 90s recession, was just driven by household debt expansion. And you can only do that once, unless you want to pay it down and then start all over again. So, you look at, say, for example, like Alex Joyner had a great graph out about a month ago that was total sales across the entire economy per capita. And what he concluded was that it peaked in 2006 or 2007. And in per capita terms, it's gone nowhere for 18 years. And I don't know how anyone, even Spin Jim, can turn that into a positive narrative.
Well, he'll try, as we saw through the MyEFO. But let's get on and look at some of the specific data that you've put together. And as always, of course, you've put some work into this. And we start with a very appropriate chart, which is we're in the boat together. Well, maybe.
Yeah, pretty much, mate. Well, as usual, the slides are available at burnouteconomics.com. If you would like to subscribe or make a contribution, that would be immensely appreciated, and it would be a very, very nice little Christmas gift under my tree. So we'll get straight into the numbers. Now, in the discourse around the Australian economy, one of the things that's got a lot of discussion lately, I should say, is the issue of living standards, or as people have more recently begun to talk about it, real household disposable income per capita. Australia has seen one of the largest falls in the OECD, if not the largest, depending on which metric you choose. And things have been challenging for quite a while on this. This is something that the AFR has focused on quite heavily. So what I thought I'd do is, people say, well, things have always been this hard. No, they haven't. This charts the growth in real household disposable income per capita from 1995 to 2007, a 12-year period, and then from 2012 to 2025. Sorry, 13-year period, I should say. Anyway, long story short, I think the graph rather speaks for itself. The fact that we've seen very, very highly anemic growth. I think it's under 2% cumulatively between 2012 and 2025 versus about 38% growth cumulatively between 1995 and 2007. And I just want to clarify one thing. This is deflated by the working age population, because otherwise you start seeing boosts here and there, but that's just due to population composition changes, which is not really fair. So this is just of the working age population, and yeah, it's not a pretty picture.
And just to be clear, this is real. So this is allowing for the change in the population mix and also the inflation. So what it says is that in recent years, most people have gone absolutely nowhere.
Exactly. It's the title of today's show, Australia's economy hitting a wall. And I think one of the things that as well about this is that it should be going somewhere, even just based on just trends within the economy. Say, for example, we have a higher labor force participation rate. We have more women in the workforce. We have more women working full time. All of these factors should be boosting real household disposable income per capita in a vacuum, yet we're still going nowhere. So in a lot of ways, once you start adjusting for that, we're going backwards, because we're working more to achieve less in per capita terms. So it's just it's a remarkably disappointing picture. And I will say one thing is that this is something that your old mate Spin Jim used to talk about quite a lot.
Yes.
In opposition.
In opposition. Yeah, it seems to have gone a bit quiet recently. And two other points about this chart. The first is, of course, this is the aggregate average, but there would be a distribution within this. And in fact, there would be some people whose per capita disposable income would have been growing quite strongly, particularly older and perhaps more affluent people, which means there'll be other people who are even going backwards even more. But the other point is, Tarric, we've had a technology revolution over this period, and you would have thought there would have been some rise driven by the ever greater power of technology and all those things. So that hasn't really translated into returns for ordinary people. And the final point is, if you look at the forward projections from MyEFO, there's actually not much change forecast over the next few years. So what this tells me is that this is not just a trend which is going to suddenly uptick. This is a trend which is likely to continue into the future, which is why your analogy of the wall is so right.
It's really quite unfortunate, because you're absolutely spot on about the distributional issues with incomes, with spending here in Australia. Because if you look at the data, say the Productivity Commission data, it basically shows that real wages for people under the age of about 35 went nowhere post financial crisis between 2008 and 2008. Sorry, between 1998. Sorry, between 2008 and 2018. But then if you get the data from the RBA, which they were thankfully kind enough to share with me, real spending for people under 45 topped out in 2007, 2008 at an aggregate level. So you're talking about an economy that's increasingly basically a three-legged rocking horse, because it's relying on an increasingly narrower and narrower and narrower base of generally older, generally more affluent households. And this is a good example of this is the CBA, or I should say CommBank IQ, as they like to call it, data on spending by age demographic. Because in the time that they've been releasing that data since 2022, the cohort that has seen any growth in cumulative terms, or even in just on year-on-year terms, has dwindled and dwindled and dwindled and dwindled. And now it's got to the point where the only people now seeing positive year-on-year growth are people over the age of 55, and everyone else is going backwards. So, and obviously that's an aggregate level. So you've got people who in the under 55 demographic could be doing very well, but then there's, on the other hand, there's other people who are doing very, very poorly.
Yeah, absolutely. And I think the other interesting factor here is that there have been some significant demographic changes over this period too. You mentioned, 2 household incomes rather than one now being predominantly the story, which of course has allowed the banks to lend more for housing, which has put housing costs up. But the other interesting factor is that when you look at it, housing formation is different now. So people are actually becoming homeowners a lot later, if they ever make it to home ownership. And you've got some very interesting data here about the impact of those demographic changes.
Indeed. This is from the latest experimental ABS data series on household size. And basically what is occurring over time is that we're seeing the rise of more and more single-person households, and that is affecting the demand for housing. So if we go back to the start of the data series, back in 2006, the way that household size was evolving was actually putting downward pressure on demand for housing as more people congregated in homes. But what we've seen in more recent years, particularly since the pandemic, is a rise as the population ages of these changed households. Most notably, I'm just going to go to the next slide, of single-person households. So what we've seen even since 2020 is more and more households that previously would have had something closer to the average, whether it's 2 or 2.5 or 3 occupants, turn into single-person households. And this adds significantly to housing demand. So if we just purely take it back to the first chart at face value, this added demand for over 52,000 homes in the year to June 2025. Now, this is something that I've actually spoke to the economists at HIA quite extensively about, and they've made some very, very good points on this. Their conclusion is that before adding a single migrant to Australia, we need somewhere between 100 and 120,000 additional homes just based on this demographic change, and then obviously teenagers getting older, people then moving out, forming their own households, etc. So we've got a really, really sizable problem here that isn't really factored into to the overwhelming majority of estimates of how many homes we actually need to build. Because once you start adding this in, the situation that is already very, very difficult, as laid out by, say, the National Housing Supply and Affordability Council, becomes just downright diabolical.
And it's interesting that if you look at that by the housing occupation status of singles versus others, there's a predominantly greater concentration of singles in the rental sector. So there's a really interesting observation here, because more people in the rental sector are actually under financial duress compared with others, which would suggest that single people, particularly perhaps younger single people, are actually really, again, caught in this trap. And it does seem to me to be that this is all part of that same narrative of this changing demographics and the impacts on housing and the costs of housing. And if you're an individual, not a family, if you've got one income, not 2 or more incomes, it's harder and harder to get on the housing ladder. So the typical first-time buyer is now, late 30s, beginning to fall over to the 40s, like in the US, by the way. And a lot of people are caught in the rental sector and are likely to remain in the rental sector for their entire life. And that is a fundamental shift in aspiration and outcome for a significant proportion of Australians.
It is, and I think that is just something that is just going to weigh on our economy going forward, because if you're someone who didn't manage to make it onto the property ladder and didn't, especially people or even people who still have large mortgages, really. If you're approaching retirement, or even if you're in your 50s, even your early 50s, and you're in a position where you've still got a huge mortgage or you don't own your own home, what do you do? Do you start putting extra cash away into your super so you can have more money when you retire? Or what exactly do you do? There's all these different questions that I think need to be asked, because what exactly are we going to do if Australia becomes defined by rents or by renting retirees and people with these huge mortgages as we go forward? Because part of the problem is that people talk about and this is something that that you've rightfully covered with DFA and through the ABC and through others, of these large indebted, these households with large debts, particularly mortgage debts in retirement. But you're talking about people who overwhelmingly bought their first home or even their second or third home back when housing was affordable, back when, during the age of the first part of that graph that was, such a strong meteoric rise in household disposable incomes. But what about the next cohort of retirees? What about the people who've bought, say, post 2002, post 2003, who have taken on these larger and larger debts, who haven't seen that income growth, who haven't been able to pay down their mortgage in the same way that previous cohorts have? It's no good for the economy, and these people are going to face some very challenging times. And what exactly is the government going to say to these people when they run out of money? Sorry, we can't help you. We don't have the social housing because we've built bugger all over the last 25 or 30 years.
Well, certainly if you look at a lot of the reports done on how much you need to retire securely in Australia, the basic assumption is you have your housing at no cost. In other words, you had a house, you've paid it down, so you're not having to pay mortgage repayments into retirement. Unfortunately, the reality is that more and more people are retiring with continuing mortgage payments, or are actually retiring in the rental sector and will have to continue to pay rent into retirement when traditionally incomes tend to drop. And that's having a couple of profound effects. One is that people are actually continuing to work for longer rather than retiring than previously. And secondly, it means that their disposable income for other things into retirement are definitely getting squeezed. And as you say, what is the support mechanism for that if you actually don't have enough money in retirement to be able to find somewhere to live and stay in accommodation? Do you just go and live in a car or something? And is the government able to help? Well, that's going to be an interesting question, because there's going to be a larger proportion of the population who is going to be in this trap. So again, it shows you how the policies and settings over the last 20 to 30 years are going to resonate down the next decade or two or three, to the detriment of, well, many Australians.
Indeed, and I think the thing is that that's the baseline. That's if nothing else comes along to rock the boat further. But if we see a similar trend in terms of, say, for example, like, say during the 90s and the 2000s, you saw the rise of robotics in heavy industry, the rise of the internet, the rise of computers and stuff like that, and you saw a lot of older people fall behind and fall out of the labor force and be forced to retire. Now, we face the rise of AI. To what degree it's going to fulfill its promise, I have no idea. That's beyond my pay grade. But if it even fulfills a small amount of that, and you're talking about these older, heavily indebted cohorts ending up on, the unemployment lines, that is going to create massive, massive economic and political problems.
Well, that's right. Now, I've got a particular view about AI, which is that the hype has gone to 11, and the reality is only about a 1 or a 2 at the moment. And I don't know what your experience of using the recent, large language model, AI assistants, but they seem to have got worse again. So the amount of hallucinations in some of the responses are now a lot higher than they were 6 months or a year ago. So I'm not sure they're necessarily going in the good direction, despite all of the global capex. It's 500 billion or something that all of these AI companies are going to spend on these data centers, and big questions there. But you're right. So even if not all of the AI promise, but just a proportion of the AI promise comes through, then it's going to have a profound impact on work and working environments for some. And unfortunately, some of those people are going to get caught in the crossfire too. So there are really, really big questions. And I suppose it takes us to the question then of, well, what is the safety net? What are the benefits, programs and systems in Australia, and how are they tracking, and how will they need to track in the future?
Indeed. That brings us to our next chart, which is from Antipodean Macro, which is a great great data source, great Twitter account. Definitely highly recommend a follow. Basically, this shows that we are seeing an acceleration in the number of people on job seeker and on the unemployment version of youth allowance, which is quite concerning because we are not really in a great position with our labor market. I mean, this is something that you and I talked about in the last show when we shared that chart from ANZ and Indeed on their job ads index. And it was rather funny that just a few days after that, the ABS released the latest labor force data, and it was awful. It was tens of thousands of jobs lost. I mean, as we've discussed previously, I think it's an issue with seasonality because of trying to adapt to Black Friday, the changing evolution of the sales periods and hiring and stuff like that. But if you take a longer view of that, rather than just focusing in on the monthly data, we're still seeing jobs growth slow to a relative crawl. And that's a problem, especially considering the fact that we're already seeing this is what things look like when the government is already playing a very, very significant and major role in supporting the economy through government-funded jobs growth. So what does it look like when, the belt tightening inevitably comes and we start to see more and more governments, whether they be state, territory, or federal, starting to pull back a little bit more. I mean, recently in the news, I'm not sure if you've seen it, but the war of words between the federal government and the various health ministers over elbow, telling them to cut their spending on hospitals as the population explodes. Good luck with that.
Yes, and it's interesting to note what proportion of families are receiving some sort of government support or government benefits to get by. And the data that I've seen suggests that's continuing to rise. So more and more of society is being propped up effectively by taxpayer transfers from other taxpayers. Now, there's a limit to how far that can continue.
No, absolutely. And I think one of the things as well with this chart is that the test for income, so the means test for this over time has become more and more and more challenging to pass relative to, what you would consider a normal income. So if you've got, that's one of the things that is a little bit frustrating, to be honest, with the data from Centrelink and the I forget what the government department is. But anyway, that's one of the problems with the data. Because say like in the US, you've got the initial jobless claims, which is a great data source, goes back decades, really, really interesting, helps you identify major turning points in the labor market. But because the eligibility of people for this changes over time, depending on their means and how the means test evolves, it means it's not that useful as an indicator. Yes, it's useful as a directional indicator, but not as a volumetric one, for want of a better expression. Because people have lost their jobs. That's we can see that, we can see the trend up. But how many people have lost their jobs? How many people have a partner or a spouse who earns too much money? I mean, even someone who just earns median full-time earnings. If you've got someone who earns median full-time earnings in your household, you don't qualify for unemployment benefits. They make too much dough. So it masks the deterioration in the labor market when it does occur, to what degree it's potentially occurring. So it's challenging, and it's a little bit frustrating that we don't have better data on this, especially because the unemployment data also doesn't really reflect that, there's over 1 million people just who qualify for unemployment benefits. And the number of unemployed people in the ABS labor force data is a hell of a lot lower than that. What is it? Almost 1.1 million.
Well, yes, we might get into a bit later to the statistical agencies around the world and how they are or not actually representing the data that they're actually saying they're representing. But we won't go there quite yet, because once we'll get on that, we want to get off it again. Now, one of the other interesting questions, of course, though, is with this sort of pressure on households and people aspiring to be able to get into the property market. One of the really interesting questions I get a lot from my one-to-one conversations, well, should I buy or should I rent? Which is actually most cost-effective? And there's some interesting data on that too.
Yeah, I'm always always being told about the sort of the greatness of various US markets, of how they are so favorable for people to be able to go and, buy properties, and that supply growth is so amazing, et cetera, et cetera. But I think one of the problems is that it very much is just a broad ideological overview. It's not actually an expression of the underlying forces that are actually acting on housing supply growth. And I've got this great chart here that shows Austin, Texas, which is, the darling of the YIMBY movement, of the, let build, versus Sydney. And as you can see, for most of the period, up until around about the start of 2022, it was much, much cheaper to just build a new home than it was to rent a home. And that's part of that. And that's the thing. If you have a market where it is cheaper to build than it is to rent, what are developers going to do? What are property investors going to do? They're going to build homes. What are even owner occupiers going to do? They're going to turn around and they're going to go, well, damn, it's 30% cheaper for me to just build a house rather than renting a house. Why don't I just buy one? And I think that's one of the forgotten things in the whole, sort of YIMBY versus NIMBY debate. The fact that we don't have proper functioning market signals to build. Because if you're going to build in Australia, you have to do it at scale, generally speaking, or pick up a property for a bargain in order to really, really make those strong profits that define developments overseas. Whereas here in Oz, it just doesn't add up. The whole build to rent thing. I mean, that's one of the reasons why build to rent needs all those various subsidies from government in order to make them work.
Yeah, well, the build to rent debacle in Australia is pretty disgraceful, not least because a lot of the properties that are proposed to be built are going to actually be more expensive to rent later because the rents are higher, because the quality of the property is different from what you might see elsewhere. And the other interesting observation, when you think about the build versus rent story, or buy versus rent story, remember that there are more people in the rental sector under financial pressure, about 75% of those under financial pressure, about half under those with a mortgage, according to my data. So you've got this crazy situation where, in theory, rentals should be easier, and yet more people in the rental sector are struggling. Now, that's because, of course, the demographic differences between, as we discussed earlier on, not everybody's the same. And so this is why it's such a mess at the moment. And this is why it's very confusing for many people trying to work out whether they should aspire to buy or not, or whether they should say renting or not. And then you overlay that longer term story that we touched on earlier on about what happens when you go into retirement. All of those things are in there too. So this is a very complicated story. But there is not a simple, it's always better to buy rather than rent. It's way more complicated than that. And the other factor, of course, in all of this is that you're not necessarily also comparing apples with apples, because if you own a property, you've got responsibility and liability for its ongoing maintenance. And what I find interesting is that quite often when you actually talk to people about the property that they've got, they don't include those ongoing maintenance costs that are part of just owning a property. Whereas if you're renting, you don't have those additional costs too. So it is a lot more complicated than the headline story would suggest that it should be.
It is, and I think part of the problem is that we've just got such a broken set of settings around our market these days. Just an interesting side note. Back in the 1980s, the sort of mid-1980s, 60% of housing investor credit flowed to new builds. So, yet at the same time, the proportion of homes owned by investors remained relatively static. So you're talking about a system that was heavily focused on providing new homes and, generally speaking, growing their share of the overall housing stock, but not the proportion of it through new builds, which was great because everybody wins. They build to rent. They they see that the capital appreciation, it's generally linked to wages. Everybody's happy. The problem that arises in, the sort of, generally speaking, the 2000s and later, is that we reach a point where property investing becomes about speculation. It becomes about capital growth, and capital growth almost entirely. There's data from, there was a domain economist, I believe, who spoke to Finder a while ago, and their conclusion was that the average property owned by a property investor takes about 10 years to become positively geared. And considering the hold period for a lot of investors, they never own a positively geared property. It's negatively geared the entire time. And then if it does become positively geared, a lot of them just sell it and then buy another one so they can negatively gear that. So I think they've just got a really broken set of settings around property investing here in Australia. And I think the problem is that property investors in the 1980s would be very welcome at this point. But the problem is that given the current settings in terms of the cost to build, the cost of housing, etc., it's very, very difficult to play that role. And that is why only about 17% of new builds, 17% of overall investor loan activity is for new builds these days, down from a peak of about 60% in the mid-1980s.
Absolutely. And it's very interesting when I work with people on a one-on-one basis and look at their investment property portfolio, and we do some calculations on money in, money out. So how much are you actually seeing coming in via way of rents compared with what's going out in terms of interest payments on the mortgage, et cetera, et cetera. Without the tax breaks that you get, they're almost all underwater. If you include the tax breaks in as well, still some are underwater. And yet people have this view that, well, it doesn't matter because the capital appreciation is the thing, right? But if you're in Melbourne, for example, property investors in Melbourne have seen very little capital appreciation in the last few years, which explains why more property investors are now selling their properties into a perhaps weaker market than people expected, because now interest rates are beginning to go the other way, possibly. So it does show you that this is a way more complicated story than is often portrayed. And I do think that we've lost the plot, because if in fact, as a result of support from government to the property investment community, it leads to building more stuff, then that's probably in balance positive. But if in fact more and more property investors end up just buying an existing property, so we don't increase the stock, and if in fact those property investors don't make returns on those investments, then the whole thing just say, why? Why would you do that? Why would you actually invest? And in fact, I've had quite a few conversations over this year with people who've exited property investment and gone into other asset class investments, because of course the stock markets have done quite well, and even term deposits are still doing reasonably well, particularly with the bond yields where they are now. So it shows you that the settings currently in train are actually not having the input and output and outcomes that people would want, and yet we've still got them.
Yeah, it's rather interesting, because I feel like at this point it's less about the mathematics and more about the psychology and the culture of property investing. Yes, I mean, obviously it comes with risks. I mean, I've known people who've had properties, haven't done very well out of them overall, and they've had people I knew one who turned it into a marijuana growing house. And that was, I tell you, I was there. That was a pain in the ass to clean up after. But it's a psychology based thing more than anything. At this point, it's the get rich thing. It's the fact that 73% of property investors are in a single home. These are not. I think that's one of the misconceptions around property investment. This idea that they're all moguls and blah blah blah. I mean, I don't know. Maybe hidden behind all the trust and company walls and stuff, where more and more properties are held these days. That's true. But in terms of the ATO data, it's overwhelmingly like I said, 73% are just single property owners. It's that they're people who've bought, a lot of people consider it to be a government-funded lottery ticket on the property market. And I think that's one of the issues that that drives such a huge, that has driven this huge increase in demand from property investors from owning something like 18% of the properties of housing stock to the point where they now account for about 80%, they now account for about 40% of mortgages. So it's just this completely disproportionate increase. And then we have policymakers all looking around going, oh, why are houses unaffordable?
Yes. Well, it's tended to drive prices up. Interestingly, in the UK, where we had a similar statistic with a lot of mums and dads owning individual investment properties years ago, the government sort of changed the settings, made it less attractive for individuals to hold property, and they've given more tax breaks to some of the larger corporates to hold property in their place. So what's happening in the UK is that more properties are now being bought up by corporations, including corporations from overseas. They're holding those properties, putting them then back on the rental market, and in fact, quite often asking higher rents. But the government's argument is, well, it's a more secure way of managing the rental sector than just leaving it to mum and dad investors. And I'm thinking, what? So, it is a crazy, crazy story where the government is backing one set of investors over another set of investors in the UK now. And so a high proportion of investment properties in the UK are now owned by corporates rather than actually ever before. So it's a crazy, crazy world. And I fear the same could be happening now in Australia.
Well, I think that's one of the things, isn't it? I mean, we saw during the global financial crisis that when things were started to look a little bit challenging for the property market, all of a sudden it was like, foreign buyers? Yeah, sure, we can do that. Great. Yeah, foreign buyers. First homeowner grants. We'll do some at a state level as well. And there's just all this various stuff that just gets thrown at the market when things get challenging. And I think that's part of the problem. And I think that people who fear, private equity and corporates buying up housing if there was to be a crash are entirely justified in that concern. And I think that, that may well happen. I mean, we live in a country where the government would hate to see housing prices fall. I mean, they told us so.
Absolutely. No. Well, prices will never go down on our watch at either side of politics, and that's the one thing that both sides of politics have pretty much, been on the same ticket. Though, interestingly, in New Zealand and in Canada, different story, which we might come on to in the context of migration. But there's another angle here, which is just worth thinking about. Of course, in the MyEFO, Chalmers did confirm that the electricity support subsidies would stop. And that's having a very interesting impact on the CPI and therefore on the RBA and its policy settings, and potentially will have a bit of an echo into the next few years as well.
Indeed. What I've done here with this chart is I've taken the actual CPI from the electricity component of the CPI over the last couple of years and charted its annual level of inflation. Now, as you can see, it's been all over the place. And this has largely been as a result of, in more recent times, of the government's various, well, not just the Albanese government, also state governments as well, various electricity subsidies. And as you can see, we are going to see double-digit electricity price inflation as measured by the headline CPI for quite some time to come, with the exception of a little bit during the middle of next year. Now, if we have a look at this chart here, this actually shows how many percentage points electricity is adding to the CPI and taking away from the headline CPI. And as you can see right now, it is making a very significant contribution. And that's part of the reason why inflation is now so resurgent in headline terms. Now, it's not being counted in the trim mean, which is what the RBA's focus, so that's just worth noting. But as you can see, even as late as October next year, it's still going to be adding 0.5 percentage point to the CPI. So even though Chalmers and Albo bought conditions for their rate cuts, bought conditions for their re-election, and their inflation-fighting credentials, we have been paying for that since July. to some degree in the headline CPI and are going to continue paying for it well into next year.
Yeah, and it's worth asking, Tarric, just remind me again, when was the election this year? What month was it?
Oh, it was May, Martin.
And guess what happens?
Isn't that funny?
Yeah, guess what happens just after May? You suddenly, from July onwards, it goes up. How convenient.
I'm shocked. I mean, what a coincidence.
I did say at the time it was an election teaser. It was, oh dear. Yes, so you can see here why the RBA is now suggesting, well, maybe there won't be any further rate cuts, and maybe for the next year or so, there's a risk of a rate rise. And of course, the bond yields have actually moved up quite smartly. And some of the bank economists are now saying, there could be a rise as early as, middle of next year or maybe even before. So yeah, it's really, really interesting. And it shows you, if you start meddling, the more you meddle, the more you need to meddle to be able to keep the balls in the air. And if you stop meddling, things go a bit pear-shaped. Now, let's just move the conversation forward, Tarric, because we had, of course, the final data from the ABS in the last couple of days relating to the migration statistics. And interestingly, the numbers were a little bit softer than some people were suggesting based on the earlier data. And I actually did a post about this suggesting there was a bit of number wanging going on.
Yeah, it's an interesting one because if you look at the labour force survey, which does the working age population on a monthly basis, or at the national accounts data, which does it which it estimates on a quarterly basis, it was looking like the migration was reaccelerating. That was, basically, I mean, if you look at the numbers, it was, I believe you used my chart the other day, that basically the level of population growth in the labour force survey, working age population growth in the labour force survey was tracking fairly strongly with a lag to net long-term and permanent arrivals. But if you look at the numbers from net overseas migration, it's just not there. We haven't seen the same increase. Now, for what exact reason that is, I don't know, but all I can say is that there are some fairly substantial revisions on the way for the national accounts and the labour force survey numbers coming at coming with their next data in the new year.
Well, I just wonder whether it has anything to do with the 3 million or so temporary visas, because of course a lot of those wouldn't necessarily be caught in the migration statistics, right? Because people have to be 12/16 of the time to be caught in the migration statistics. So I just wonder whether that's to do with people coming for a few months and then going away again and not being counted in the migration statistics, because the job numbers are definitely higher.
Well, that I think is one of the really, really challenging things about quantifying where we're at with things, because, okay, now this depends on how you take net long-term and permanent arrivals. I mean, some nations just flat out use that as their migration data. They don't bother with the 12/16 rule because, they want more timely info. But if you just do take that at face value, it presents a concerning picture, because just because someone isn't in Australia for 12 months out of 16, it doesn't necessarily mean that they don't maintain an abode here. It doesn't necessarily mean they don't have employment here. So it's a very challenging picture in that regard, particularly, as you say, because we do have so many temporary visa holders coming and going on an ongoing basis. I mean, 3 million people, it's more than 10% of the population.
It's a lot, isn't it? And in fact, if you take a longer term view, the other way of looking at it, and in fact, there was an IFM chart that you've shared here, which shows that the cumulative total to get to 1 million, if you go back to the 90s, it took more than 10 years, whereas now it's just 2.5 years.
Well, I called this chart, "Is this mass migration?" And I think this is a very important question, because there's been this huge debate from both sides of politics that we either have mass migration or that we don't. But both sides have refused to quantify it. But I think if anything is an expression of the change towards much, much higher levels of migration and arguably mass migration, I think it's this chart. Because, we've gone from it taking 12 years in the early 2000s to add 1 million people through migration to almost to less than a quarter of that these days. And I don't think that we are preparing. I don't think we have laid the groundwork for this expansion of the population sufficiently. And I mean, I believe it was 7 News the other night who said that, that New South Wales's hospitals are just unable to cope with the demand going forward. That more needs to be done to support them. And that leads us back to what we were talking about before with Albo getting into the funding fight with the state health ministers that, oh no, well, we can't afford it. Well, what about all the tax revenue that you've apparently got from all these extra migrants? That's meant to be funding all of this, isn't it? That's the narrative. But it sure as hell isn't working out that way, is it?
Absolutely. And it just also, I think, cast an interesting question on the role of our statistical institutions like the ABS or like the ONS in the UK or the BLS in the US. And if you want a good example of, be careful what you wish for, just look at the latest BLS data for the US inflation, because of course it reported as down. But when you look at it, there are lots and lots of blank fields in the elements that actually make it up. So in fact, because of the holdups in the US with the data, that data is not very robust, despite the fact the markets reacted majorly when it first came out. In the UK, there have been a number of reports on the Office of National Statistics' inability to create good statistics in a number of areas, and some significant criticisms about the culture of the bean counters, and suggesting that they've got to change things quite significantly. And of course, in Australia, the ABS was very keen to highlight the gap and difference between the migration statistics and the arrivals and departures in Australia, and you can't correlate one to the other, despite the fact that other entities, including one from Treasury, suggest that actually one leads to the other quite interestingly. So there's some really interesting questions below the waterline here on how accurate the scorekeepers actually are.
Well, I think the thing is that, I mean, even, the ABS, or what was it, the Household Income and Wealth Survey, I believe it was, that got cancelled because of the issues with data quality. There are problems. That's not unique to Australia. I mean, the ONS in the UK is absolutely king of that, of the problems in that regard. Some of their data has been absolutely garbage, to the point where they're basically like, just disregard it. It's just crap, and I mean, I'm not going to pretend to know exactly why this is happening. I mean, some people tell me that it's a funding issue, for example, that they just don't have the money there anymore. But I think for me, as a fellow data nerd, it's disappointing that there is so much great, robust data. Say, for example, like the ABS Household Expenditure Survey. Brilliant piece of data. Goes all the way back to, somewhat aptly 1984, but it stops in 2016. It hasn't been done in, we haven't had an update on, the snapshot in 9 years. Yet that was one of the most important and robust looks at Australia's different demographics and how they were faring in terms of their expenditure, what they were spending their money on, how much they were spending their money on, what proportion of it. And there's quite a few like that, which are just brilliant data sources, which I still rely on to this day, that haven't been updated in years. I mean, there's another one that hasn't been updated since 2022. And the next particular update is TBA. So it's just a bit disappointing that there is so much potential there. So much. And not only that, but how exactly, if you're the Prime Minister, if you're the Finance Minister, the Treasurer, how can you accurately make policy for all Australians when you don't know what's happening with all Australians?
Well, I have a theory sometimes that they prefer not to know the data, because if they had the data, they couldn't actually spin the conversation the way they want to spin the conversation. So having no data is, gives them more freedom and more latitude to say what they want to say, and nobody can really contradict them because there's no official stake in the ground. Maybe I'm being a bit cynical in my old age, but I wonder whether there's some of that. But the other point, of course, is that there are real issue with gathering statistics, and a lot of the ABS problems was trying to capture data using surveys online rather than actually making phone calls or visiting people. And the surveys online are renowned for being inaccurate for all sorts of reasons. And it's interesting that some of the smaller surveys that are done by some of the sort of finance portals, for example, are based on 1,000 online surveys. Now, I'm quite skeptical as to whether that 1,000 is really enough to make a significant, accurate assessment of what's going on anything. That's why I do 52,000 over the year, because I think that's at least a 0.5% sample, which means it's quite a lot bigger. But without good data, it's very hard to know where you are. If you don't have a compass, any direction is fine, right? So it seems to me this is a really, really important issue. And yet, I don't believe that it's being given the attention that it deserves, certainly in Australia and around the place. But I come back to my earlier point. It is quite convenient for politicians who want to spin a particular story. It's quite convenient for regulators who want to intervene, but not too much. We don't want to actually squash more lending for housing, because of course that's the gift that keeps giving. So the regulators are doing a relatively light touch job, although of course they are now doing a little bit of tweaking on the investment lending side of things. And this, I think, comes back to the fundamental point, which is that for many people, what they're seeing in the official story of Australia and what's going on in Australia and what's they're experiencing individually is completely disconnected. And I think that's where we've got to now, because of the fact that we don't have good data. But we do have some interesting data relating to one of our most major trading partners. And this chart here is just a killer slide, right? Because, something is stirring in China.
It is. This chart is from the Wall Street Journal, and it basically shows that China has grown the size of its export base by 45% since 2019, and its imports are up by less than 2%. So, despite the fact that there has been the promise that China was going to become this enormous consumer, that it was going to, transform the world, and that the opening of the Chinese market to Europe in particular was going to deliver this boom in goods and sales to China that was going to last for 100 years and blah blah blah. It hasn't come to fruition. Instead, China's imports of things like finished goods or cars or you name it from places like Europe are falling. Meanwhile, China's exports are surging. So what we are essentially seeing is China taking a larger and larger and larger slice of global trade, but global trade not growing anywhere near as much, which means China is basically cutting a whole lot of people's lunches, and they're increasingly not very happy about it. French President Emmanuel Macron came out about 2 weeks ago to talk about this, and he said that Europe needs to consider trade actions against China if China doesn't move to reduce its trade surplus with Europe, which they're obviously not going to do, but that basically that Europe needs to start imposing trade barriers and tariffs on China if things don't improve. So I think in a lot of ways, the trade war is very much going global.
Well, I was going to say this does reflect, quite interestingly, Trump's position with regard to measuring the inputs and outputs into a particular country, right? And what I also would highlight is that a lot of the exports in China are actually still quite significantly government supported and government subsidized. So if you look at the cost of energy, for example, and some of the other things that are going on there too, some of those manufacturers in China are still being supported to export. So it is a very unequal playing field. And so there is a grain of truth in the Trump tariff story.
Oh, there certainly is. I mean, you've got an issue where China has massively expanded its manufacturing capacity. In some cases, way too much. China has just gone to the moon in terms of supporting all of these industries because they increase GDP, they increase China's role as the world's, the globe's factory, and it's all hunky dory as long as there is demand for those products. But now what we're seeing is as more and more nations seek to protect their own domestic industry, that there's no longer a place for China to be able to grow its export base so dramatically. Whether it's steel tariffs in Chile, whether it's going to be car tariffs in Europe, you name it. People are going to have to raise these trade barriers to protect domestic industry. And the problem for China is that they've invested all these trillions and trillions and trillions of dollars into their manufacturing sector, through loans, through subsidies, you name it, that they now need to make good. They now need to be able to create revenue to service that debt, to be able to make those companies and those investments viable, but they can't. A good example of this in particular is the solar sector. China produces some components for the solar sector at such a rate that it's about 300% the global level of demand. So it's just completely out there. And a good example of this, and one very relevant to Australia, is steel. This year, China's steel exports are on track to hit their highest level ever. And in their own right, China's steel export industry would be the third largest manufacturer of steel on the planet. And the problem is if this continues, if Chinese demand for steel continues to deteriorate, and they're forced to try and find a home for that steel overseas, what happens to us? We're the ones who provide them the overwhelming majority of their imported iron ore. We're the ones who provide them with a sizable quantity of their coking coal. So what happens to Australia as China's steel industry continues to deteriorate, as they try to find a home for this product offshore? And not only that, but last month, the first shipment from the Simandou megamine in West Africa set sail to China. So not only are we facing an issue with potentially falling demand, but we're also facing an issue with potentially rising supply.
Yes, and it's interesting that China has announced that they want to try and push more of their goods into households in China, but there's clearly a limit to how many things people in China can actually afford to buy and want to buy. And so if they are unable to export internationally, that's going to be a problem. But the chart says they are doing it quite well at the moment. So it shows you, I think, that next year the trade story is still going to bubble on, and this will be a very considerable issue. It shows, I think, also that there are some profound implications for Australia's economy, as you say, particularly if the demand from China eases back, even a tad, it's going to have a significant impact, because MyEFO showed that the estimates that they had proved to be a bit conservative relative to what's actually happening. So, there's been a bit of the hollow log that saves the Australian economy. And meantime, of course, if we stand back and think about this last year, we've got households still going sideways or down in terms of their returns and their real cost of living and their real wealth. We've got housing pressures still bubbling away. We've got a lot of noise with regard to the economy and a lot of disconnect between noise and reality. And I don't know about you, Tarric, but I suspect that next year it will continue, except that it will probably be even more complex.
No, I thoroughly agree. I think that I think we've just entered one of those times where I think it was Lenin who said that that there are years when nothing happens, and then there are weeks where decades happen. I believe it was something along those lines. But I think that's basically where we're at the moment. We're at this fulcrum in global events. We're at this turning point, and I think that we are in for a bit of a roller coaster ride. You've got the US midterms next year. Trump trying to make a case that inflation is gone and everything is hunky dory with the cost of living, which I think is going to fall incredibly flat. You've got the trade issues with China. You've got the ongoing stoush between China and the Japanese, China and the Europeans, and that's without even getting to the issues that we face here in Australia. I think it's just going to be a very, very interesting year ahead.
And I just add to that the recent announcement that the US is going to sell more weapons to Taiwan, just to add a little bit of extra pep to the China-US relationship.
No, that's just what it needed, mate. More spice.
Well, Tarric, I want to say thank you very much for all the collabs through this year. It's been great catching up with you on a regular basis and getting your data. I hope you and yours have a wonderful, peaceful period over Christmas and New Year. And I'll look forward to having more conversations next year. And as we said at the start of the show, to all our followers and watchers and listeners, have a peaceful Christmas and New Year. And we'll look forward to chatting again in 2026.
Absolutely. Merry Christmas to all, and to all a good night.